Hey, how y'all doing? So this should be a fairly quick video. I'm just going to be talking about what are the key liquidity pools that you need to be aware of. I believe I have made some videos on this in the past, but we're going to talk about it again in this one for anybody that didn't see the previous ones, okay? So there's several different liquidity pools that you need to be aware of. Let's start from the absolute highest and let's just work our way down. Or maybe not the absolute highest, but let's go to the monthly chart right here. Now, again, you can take it a bit further. Even if you go to like, say, if you really want to take it to that point, you could go to like a yearly chart, and yearly highs and lows have liquidity pools as well. So let's just start there actually. Even though I don't even utilize this chart right here, but it still is liquidity though. Like it absolutely still is liquidity. It's just I guess if you're like an extremely higher time frame trader, it's a time frame that you could utilize, right? But you can see right here we have 2023. What you need to understand is previous years highs and lows serve as our big liquidity pools. Ginormous liquidity pools, right? But of course, like if you're like day trading and you're going on a day-to-day basis, how often are you going to be taking out these levels right here? It's not common, right? So, but they are big liquidity pools though, and they're significant price levels. That's previous years highs and lows right there. But let's go to the monthly chart now. So now in the monthly chart, you can see that we have previous months highs and lows are also key liquidity pools that you need to be aware of. Okay. So look right here. That was December's highs. See right here, the absolute right where my cursor's moving. That is December's highs. That's a key liquidity pool right there. Big liquidity pool right there. And I'll tell you here in a moment how this connects and why it's useful. Okay. But first, we're just going to establish where key liquidity pools are actually at. That's what we need to do first. And then I'll tell you how we use it. And then you have previous month's lows, which is right here. See that? That's December's lows right there. These are both, that's a key buy side liquidity pool. And that low right there is a key sell side liquidity pool. Okay. Go to the weekly chart. So it is Saturday at the time that I'm making this video. And this was the previous week. It just closed. So we're going to be coming to a new week here, Sunday. And then we'll have what? This is the previous week. So this right here, look at my cursor where I'm about to note it. Previous week's highs is right there. That's previous week's highs. And then we have previous week's lows right there. See that? Previous week's highs, previous week's lows are key liquidity pools, big liquidity pools. Now, these are levels, very useful levels, even like if you're a day trader, an active trader, and these are levels that you need to be aware of because you'll get really clean reversal opportunities off these levels. Okay. Go to the daily chart now. The daily chart. What are key liquidity pools? Previous days highs and lows are key liquidity pools. Okay, previous days highs and lows are key liquidity pools. So let's just take Friday, for example. Let's imagine we're coming to Friday and then we have what? We have Thursday right here. Look at my cursor. Just imagine we're coming to Friday. We're getting ready for a new trading day and we have Thursday right here. We have this high right here as a key liquidity pool right there. So that's the absolute high of Thursday. That's a key liquidity pool. And then we have the low right here as well. Key liquidity pool. Now, also, another key liquidity pools you need to be aware of are just highs and lows. Literally, highs and lows on your chart are above highs. You have buy side liquidity. What I mean by when I say highs, let's be a little bit more specific. Well, like for example, you look right here, we have our highs high in the middle, lower high on the left, lower high on the right, and of course that's actually the it's at a monthly high as well, but you can see how we got a swing high right there. That is a buy side liquidity pool. Whenever you have a swing high like that, we can anticipate there's buy stops above that level. Boom. That is a level. That's a key level that you need to be aware of. Okay. And then right here, look right here. What do we have right there? Lowest low in the middle, higher low on the left, higher low on the right. That makes that a swing low. And underneath a swing lows is also sell side liquidity. That's a key liquidity pool you need to be aware of as well. That is a higher time frame liquidity pool as well, because being that it's on a daily chart. So you really always want to be aware of, these highs and lows on the daily chart like this, okay? Because they're significant price points. All right, so right away, we've already established several key liquidity pools on the higher time frame chart. Okay, now let's go to the 4-hour chart here. And you look at this, guys. here's what we saw, and here's how it all connects. And I'm going to show you how to actually use this information. It's not those aren't the only liquidity pools. We'll go into the other ones here in a moment, which is, that we'll see on the intraday chart here. But those are like higher time frame liquidity pools that you need to be aware of. Now, of course, on the 4-hour chart as well, your 4-hour highs and lows are higher time frame levels too. So like, for example, you can see it's like, which is also previous day's highs, but right here you can see you have a 4-hour swing high, higher time frame liquidity. 4-hour swing high, that is higher time frame liquidity right there. And even right here, if you look closely, this is a swing high. Highest high in the middle, lower high on the left, lower high on the right. Above swing highs is buy side liquidity. Those are key liquidity pools you need to be aware of. Boom, just like that. Just like that. So how does this connect though, Michael? Let's go down to a lower time frame now. And one last time, we're going to cover the intraday liquidity pools here. So each session highs and lows are key liquidity pools too. Okay. Session highs and lows are key liquidity pools as well. So for example, we have London session, which begins right here. See this? We have London session. Look at my cursor. This is where we come into London session right there. Okay. So we come into London session, and the high and the low that is formed in London session, it's going to be a key liquidity pool. Or my mistake, rewind. It's Asian session. London session is, we'll go into that here in a moment, but this is Asian session, right? So we have Asian session highs, or we have Asian session right here. This is where it begins. Okay, and then we get a little push up right here, and then it sells off all the way into midnight where it ends. So that's where Asian session ends. It's coming into midnight here. And this is the absolute high. Notice that 4-hour level, guys, that I noted a moment ago. You remember on the 4-hour chart, that 4-hour level that I was talking about? It's right there. It's also Asian session highs. That's a big liquidity pool right there, guys. Big liquidity pool right there. And it's Asian session high. So it sells off throughout Asian session. We come into midnight, it closes. Okay, so what is this? What is right here? You had a weak close at the end of Asian session. This is Asian session lows. That's the key liquidity pool right there that it takes out. It takes out that liquidity pool and it sells off, and then it takes what? Right here. See this? Because you can look at Euro USD. It was selling off all throughout Friday. All right, early Friday. All right, so you can see right here into Asian session, into London session, it was just selling off. It was selling off. And London session, I see different times for London session. Some people count London as midnight and others count it as 3 o'clock. Just to simplify it, to make it easy on you, just do 3 o'clock for London session. Okay, just to simplify, to make it super easy. So we can see 3 o'clock, we come into London session right here. And also London session, highs and lows are key liquidity pools. London goes from 3 to 11 a.m. Eastern time. Those are key liquidity pools. So you can see right here, we end up selling off and we take out what? We sell off right here and we take out, which was, what's this right here? We have previous day's lows in here. And also we have that 1-hour sell side liquidity right here, which is an old low in the 1-hour chart. But we take out previous day's lows, which, as I taught you in this lesson already, is a big liquidity pool, a major liquidity pool. So you can see reversals off that liquidity pool in the near future. Okay, that's the importance of using these liquidity pools, guys. They serve as good reversal points as well. Okay. That's where you look for entries. It goes back to, probably my most popular saying is wait for liquidity or you'll be the liquidity. So we want to wait for that liquidity. And you can see even after we take it, even though it was like Euro USD was overall bearish until it came down and took out this higher time frame draw right here, we came down and we took out this liquidity and had a little retracement as a result, because that is, again, that's what happens around key liquidity pools. You'll get nice reversals, you get nice retracements, and there's opportunity in that. All right, so you can see like right here on Euro USD, go down to a lower time frame chart now. After we took out that key liquidity pool, we were selling off. Remember, we've already taken out Asian session lows at this point, and now we're taking out previous day's lows, and then you see a nice little pop up as a result. That's what you see around those key liquidity pools. Okay, and then it ends up selling off into high impact news on Friday, and it gets like this big flush. It gets this big flush, and what does it take out right here? What does it take out? It takes out that higher time frame level that we were talking about. You remember? We have this higher time frame level right there. See that? We took that out. Look at that big, that's also a daily, that's that daily swing low, but it's also in the 4 hours, you can see right here. That is higher time frame sell side liquidity right there. See how we got our lowest low in the middle, higher low on the left, higher low on the right. We take that out right there. And after you take out a big liquidity pool like that, which what you want to be hunting for is it's a good area for a reversal. Okay, because it took that liquidity, and think of it like It's like ping pong, right? It's just back and forth. You hit the ball back and forth, back and forth. That's what price does, but with liquidity. It'll take one liquidity pool. Now it's seeking the next draw, as I taught you in the draw and liquidity video that I made. If you didn't watch that draw and liquidity video, I highly recommend that you watch that after you watch this one, because it'll connect it a lot better. If you watch the draw and liquidity video after you watch this one, I'll leave a link to that in the video description. Like this entire concept, like I'm teaching right now, it's going to make so much sense. It's going to connect so perfectly. But these are key liquidity pools that you need to be aware of. Okay. And then once you take these key liquidity pools, which this was a draw, that higher time frame level that we saw right here was a draw on liquidity. It's a higher time frame liquidity pool, but then we take that level at high impact news, which is prime time for manipulation to occur. High impact news is prime time for manipulation, it's prime time for turtle soups. That's what we saw right here. We saw a turtle soup lower to take out that higher time frame liquidity pool. And then after you take out that, which was our higher time frame draw beforehand, it's now completed its objective. Now it can now seek what? Opposing buy side, because it took out the sell side. It took out that liquidity. And this is where it's important, guys. This is like the key takeaway from this video. Yes, I told you where key liquidity pools are at and what levels you need to be aware of, but also this is how you use it. It takes out higher time for liquidity. Now we look for a change in trend after doing so, and then we look for it to seek the opposing buy side. That's the key thing here, guys. That's the key thing. So you can see right here, it's a pushing up, right? We get a big push up. Short-term highs right there where my cursor is. We get a strong close above that level. We already got the fair value gap confirmation as well. That's a shift in market structure. After taking higher time frame sell liquidity right here. That's a daily swing low. That's a 4-hour swing low. That's a big higher time frame liquidity pool right there, guys. It's Wednesday's lows. See that? We took that out right there. And I also want you to keep in mind now that we taken out that level, we've also already taken out Asian session lows as well. We've taken out Asian session lows. We've taken out higher time frame liquidity. Now we got a change in trend off that higher time frame point of interest. Look what you got up here. What's that? That is Asian session highs that we noted earlier. Again, it's like ping pong, guys. It takes one, it seeks the next. It takes that one, it seeks the next. Okay, so we've already taken out higher time frame liquidity. It then sets up for a reversal point. That's where you want to frame your trades off these key liquidity pools. Wait for liquidity or you'll be the liquidity. That's the deal, right? So you get a reversal, you get a change in trend. Now that you get a change in trend, it is established that it now wants to draw where? To the opposing liquidity up above. We have Asian session highs, and then we have the higher time frame buy side right here. That's where it draws them into. It draws them to it, it takes it, boom. And now, again, like ping pong, it hits it to the other side, right? It's taking that liquidity. What happens next? We put in a short-term low right here. We get our lower time frame shift in market structure. It comes down, it cracks that short-term low. Look at that close, swing high put in. Now it's consistently putting in lower highs. What's it going to do next? It's going to draw down into that inefficiency. Okay, so you see like on this big push up right here, it created an inefficiency on that push up. If you zoom out, you can see it better. Look right here. Well, actually, I think we got it on the 1 hour as well. Let me see. Look right there. On that big push up, you created an inefficiency in price. So see how it took that liquidity, then it seeked the next liquidity. But then after you take that liquidity, it's going to want to do what? Well, we have an imbalance down below. So we have this dealing range right here. In this dealing range, we have an imbalance that was created, which is also, it's an inefficiency, which is also what you want to be aware of. You want to be aware of your fair value gaps, your inefficiencies, because they serve as draws as well. Just like these old highs and old lows do, guys, these inefficiencies serve as draws, just like the same exact thought process. It's a draw on liquidity. So we take out the highs. It takes out that liquidity. Now it's seeking the next. Where's the next? Is it going to keep on ramping up? Probably not, because it's already taking out this liquidity over here. So now we look for the next liquidity. We look at our dealing range right here. We look at a discount marketplace. Again, take your Fibonacci from high to low, Fibonacci from that low to that high. And then look, discount marketplace is right there. We have an inefficiency in here in a discount. We can then anticipate it's going to want to draw down into a discount at that point and look for that inefficiency down below, because it didn't efficiently deliver this price action. It's an imbalance, and price doesn't like to leave areas like that. So we take out this liquidity up here, lower time frame change in trend, and then it seeks the next liquidity pool down below, guys. And that's what happens. So those are key liquidity pools. One last time, as outlined in this video, previous year's highs and lows are key liquidity pools, big liquidity pools, previous month's highs and lows, previous week's highs and lows, previous days' highs and lows, just regular highs and lows. Like you go to your 4-hour chart, for example, look at old highs and lows. Those are key higher time frame levels as well. Look at session highs and lows. Okay. Be aware of Asian session highs and lows, London session highs and lows, And also New York session too. New York session begins at 8 o'clock. Okay. And goes to 5. So you want to be aware of New York session highs and lows as well. Those are key liquidity pools. Okay. That's what you need to be aware of. So you got to know where they are first before you can actually capitalize on them. You got to know where they actually are so you can use them. And then I showed you how to use them. And again, I also went in a little bit more detail in another video. Again, I'll leave a link to that video in the video description. And it's called like something like how to identify the next draw on liquidity, something along those lines. And it ties in perfectly to this video. Okay. Because that's how we use liquidity. It makes for fantastic reversal areas because it takes one liquidity pool. Now it's seeking the next because that draw has been taken now. It's taken that draw because on your USD, this was a higher time frame draw on Friday and it drew all the way down into that level right there. But now that it's taken that draw, I mean, it has no reason in the short term, at least, to move lower because it's taken it. So now it wants to seek opposing buy stops. And that's how we frame our trade ideas is off of these key areas like this. That's why it's so useful. Like everything that I do, guys, it's based around market structure and liquidity. That's all you need is market structure and liquidity to to succeed, right? So I think that about covers this video. Hopefully you enjoyed. If you did, leave a like, subscribe to the channel. I'll catch you later.